Canadians have deferred $1 billion worth of mortgage payments, and that's monthly, since the pandemic began. Now, what's the main concern is here is that mortgage defaults have historically been very low in Canada. Now, and with the end of many of these mortgage deferral programs that these banks have implemented, to help the customers, the clients manage their cash flows, um, during the COVID period, with these programs ending, the fear is that we're now going to start to see an increase in the amount of defaults, that is, missed payments on these mortgages. Now, there's approximately 1 out of 6 Canadian mortgages were deferred. So the real question is, out of the 1 out of 6 Canadian mortgages that have been deferred, how many are back to their pre-COVID state? Or maybe not even pre-COVID state, but how many of them are sufficiently back on their feet so that they can now manage the cash flow, to manage the payments for the mortgages. So let's take a look. So almost 1 million existing loans have been deferred, and more people are taking out new loans too, and that's to cover payments. So more than 750,000 Canadian homeowners have either deferred or skipped a mortgage payment during the COVID-19 since the COVID-19 pandemic began, to the tune of $1 billion a month. Canada's National Housing Agency says. In a report on Thursday, the Canada Mortgage and Housing Corporation looked at the state of the mortgage market in Canada. The report is annual and typically looks at broad trends in the industry. But this year's numbers, as is the case with just about everything else, are viewed through the prism of COVID 19. Of course, that's the main story of 2020. The report underlines just how significant the pandemic's impact on Canadian mortgages has been. Early on in March and April, Canada's big banks announced sweeping mortgage deferral programs that would allow borrowers to skip some payments on their mortgages. While the move gave borrowers some breathing room at a time when incomes were falling, those payments must be made in full at some point down the line. And the CMHC report showed just how big the wave of deferred payments is. Now, from my understanding, many of the banks, what they've done is they've allowed you to collateralize the payments, meaning that it's added to the principal of the mortgage. So you're not necessarily looking at an increase in amount of monthly payments that you're going to have to make, but just you have to make more payments over time, but not so much an increase in your monthly amount. But you just have more money to pay off. You just kind of sliding backwards a bit, but it's been capitalized, so it's just been added to the principal of the original mortgage. So I mean, if that's the case, then that still makes it a lot easier than as opposed to, now having to all at once come up with 6 months of payments, missed payments, all at once, which would just be insane. Nobody would be able to ease into that. So roughly 760,000 Canadians applied for some sort of mortgage deferral from a chartered bank since the pandemic began. Canada's big banks control about two-thirds of the mortgage market. So that figure suggests that 1 out of every 6 people with a mortgage has opted to defer at least one mortgage payment since COVID-19 began. 1 out of 6. So the CMHC calculated that, and on average, that means Canadians deferred about $1 billion in mortgage debt every month since the pandemic began. But most of those deferral programs were for 6 months at most, which means those who applied early are due to start making up those payments now or soon. So again, here's where the recent growing concern is coming from. Given that many financial institutions have offered payment accommodations to their mortgage clients for up to 6 months, there continues to be a risk that a significant increase in mortgage delinquency will be observed in the third or fourth quarter of this year as these deferral agreements come to an end, says the CMHC said. Defaults are still low, so those arrangements with banks are a big reason why the default rate, the number of people who are at least 3 months behind on payments, has remained low so far. It's at just 0.28% of all loans on the books at the big banks. But as those deferral programs expire this fall, that number could rise. The Bank of Canada said earlier this year it expects the mortgage arrears rate could spike to twice as high as it hit in the depths of the financial crisis in 2009. That's very interesting. I think it's because of the nature of the structure of the recession that we're in, right? It's you can't just go back to work. For a lot of folks, there is no work for them to go back to. There's no the businesses that they worked at closed down, or there was a shift in the way that their previous employer is now operating, and maybe they've laid off folks because there was less revenue coming in. Because again, there was a massive slowdown. The GDP was down, was about 33% year over year. So what we're looking at is a massive shift in the amount of available employment that's out there. So uh, now we might have a quick rebound, just depends on how fast we can reopen. And if that is the case, if we can reopen fairly quickly, then we can recover maybe a fair bit of what was lost. Not everything, because I'm sure we've seen, as we've all seen in the news, there's a lot of businesses that have gone under that are not coming back, right? And that means it's going to take time to replace those businesses. That's it, right? And the question is, how long does it take to replace a business? I think one of the benefits is that we're in 2020, and the cost of starting up a new operation or even going self-employed or doing something, the cost of doing these things is, and the barrier to entry is a lot lower than it has been historically. I mean, you can now start a store online as opposed to requiring a physical location. So even just the changing of needing a physical location to having a more digital operation, that's a big change. But it also means, once the business goes under from its physical location, that can potentially impact the real estate market as well. If we're going to be seeing a shift to or like a digitization of these physical retailers, and to what extent is that going to be the case? Who knows? There's so many unknowns. Are we ever really going to be going back to normal, feeling comfortable? How long is that going to take? Because there has been a large shift in just consumer behavior in such a short period of time, right? So we'll see what happens, but yeah, this is definitely a different kind of financial crisis than in 2009. That was just, there were some issues with the banks, and a lot of capital just disappeared, right? And with some issues, I mean, obviously I'm very I'm glossing over a lot of things, but yeah, but it's just, I think this the structure of this recession is considerably different, and that's why a lot of it's just due to like legislation, right? Like if we're able to get back into our businesses, get back into our stores, get working again, and if people are able to get back into our restaurants, our business, and then we can operate at 100% again, then obviously we're going to try to do that. But if consumer behavior has shifted so much that they're never going to feel comfortable going back into restaurants, or if we're never going to get to a place where we have policies in place where we can actually have full capacity in our restaurants, and we're always going to be then, well, not even so much always, we're just not going to have the ability to operate profitably in a lot of the businesses we had pre-COVID. So again, it just requires a new shift in the way things are organized, which is for better or for worse, but it is what it is, right? You just have to deal with how these things go. So the housing agency also noted that non-bank lenders also offered deferral programs, which are set to expire soon. So considering that rates rates met rates mat lenders such as mortgage investment corporations tend to be much higher. Oh, okay. Considering that rates at lenders, there's quite a few typos in there. Anyways, rates at lenders such as mortgage investment corporations tend to be much higher to begin with. There could be even more defaults than the CMHC is expecting. So, since many non-bank financial institutions also allow such accommodations, we expect the total number of mortgages deferred to be higher, the CMHC said. So existing mortgages are getting more payments tacked onto them, and there's even been a surge in new mortgage debt too. The CMAC said the number of new loans grew by 14% in the first quarter of 2020 compared to 2019, and there's been also a lot of debt consolidations that have taken place, a lot of refinances and debt consolidations. Well, using a refinance to do a debt consolidation as well. As we can see that non-mortgage debt decreased, but mortgage debt increased. So we observed a surge in outstanding residential mortgage credit in the first 5 months of 2020, said Tanya Borasa Ochoa. Hopefully, I pronounced the name correctly. The CMHC's senior specialist in housing research. This mortgage credit acceleration is a result of an increase in newly extended mortgages, given residential property sales were up late last year and early this year, and a record number of homeowners deferring their mortgage payments from the impacts of pandemic related economic shutdowns. Yeah, so there are still a lot of unknowns. I mean, it's kind of disheartening or a little scary to see what's going to happen. Like there needs to be a lot of things in place to really minimize the default rate that's going to happen, that could potentially happen. So we won't necessarily know um, exactly what's going to happen because well, not no time soon, right? Because the defaults take 3 months to show up as a default. They just end up in arrears. If they're 3 months arrears, then default. So if it ends now, just say it ends in September, October, November, December, and then we'll start to see the impact of an increase in default rates. Now, are we going to see more homes on the market? What is that going to look like? I can't really make predictions. I don't think anybody can really make predictions. But what you can do is you can take a look at the data or the data, and you can make your own. You can draw your own conclusions, right? But yeah, is it something to be concerned about? Maybe, but who knows? If things get bad enough, then they'll probably allow for another deferral program to be put in place. Because at the end of the day, nobody wants to see anybody get kicked out of a home, and I mean, the banks don't want to. Well, first of all, they don't want to put homes up for sale. They're not in the business of selling homes. So if there's a way to work around allowing people to stay in the home and also for them to still make money, just really minimize their costs, then they're going to do that because I mean that would be horrible PR. Anyways, what do you think? Do you think it's going to just go crazy? Do you think it's going to hit the fan come December? Like they said, third quarter. I really think probably end of fourth quarter is when we're going to know what's going on. So, anyways, let me know what you think in the comments below. And yeah, let's engage in this conversation because it's a crazy time, and we just need to just all kind of get a sense of how things are affecting us. All right, have a good day.